OPEC and allies, including Russia, are in the process of rolling back the output cuts implemented in view of the COVID-19 crisis last year. About 45% of the idle supply has already been revived, and in July, the group laid out a plan for gradually returning the remainder through to September 2022. After a brief video conference on September 1st, OPEC Plus agreed to stick to their existing plan. Ministers ratified the 400,000 barrel a day supply hike scheduled for October after less than an hour of talks. Business Standard reached out to Vandana Hari, founder and CEO of Vanda Insights, on how she sees Brent crude trajectory going ahead.
So no major surprises from OPEC Plus. Ministers meeting yesterday decided to stay the course on the 400,000 barrel per day monthly supply boost in October. I suppose they would have considered suspending in view of the Delta wave and its impact on global demand. But, much of this wave is now in the rearview mirror. So again, not surprising that they decided to stick with the policy. Also, the 400,000 barrel per day monthly increment is quite conservative, even looking at OPEC's own expectations of demand growth through the second half of this year and certainly through the final quarter of this year as well. They did not clearly consider the US's request. We saw the White House last month ask OPEC to pump more than what they had planned to. The Delta wave may be gone, but the risk of more variants coming up, and especially in the Northern Hemisphere, winter season, which is the typical flu season. So I suppose keeping that risk in view, they did not want to pump any more extra beyond that 400,000 barrel per day either. Overall, it does look like OPEC wants to keep the market a little bit undersupplied. So again, based on our view of their own projections of demand and supply through the second half and through the fourth quarter of this year, they are keeping the market just a little bit in deficit. And it seems that this deficit will continue until at least the May of next year. OPEC is anticipating the world to flip into an oversupply situation, especially in the second half of next year, as output, especially outside the non-OPEC group, continues to rebounds a little bit faster. Especially U.S. shale production is expected to go up significantly through 2022. So I suppose the challenges for OPEC's harmony and cohesion will probably be much greater in 2022. They'll be entering the year, as per the current tapering plan, they would be entering 2022 with still 3.8 million barrels per day of production withheld from the market. So how and when they bring this back will be quite a delicate balancing act and perhaps sensitive as well within the group. The market clearly will keep a watch on the aftermath of Hurricane Ida in the U.S. Gulf of Mexico. I think what is notable this time around is that the facilities, both offshore production as well as refining facilities in Louisiana, which were shut down as a precautionary measure ahead of the hurricane, are taking a long time to come back. The resumption of normal operations is much slower than what would normally one would expect in such a situation. Especially, there was no damage reported to the offshore facilities, but we see nearly 1.5 million barrels per day of offshore oil production is still shut in. Just about 300,000 barrels per day had come back as of Wednesday morning US time. Now, a lot of the services that are provided to these offshore facilities from a major port in Louisiana are shut down. So, that's taking some time for the producers to find alternative services, and that could prolong the return of this oil. In Louisiana, nearly 2.1 million barrels per day of refining capacity is still shut. Again, this is almost the same as what had been initially shuttered at the end of last week. A lot of these refineries are still waiting for power supply to return to normal, which again could take a few weeks. So all in, I think it's going to be a bullish impact. US stocks have been declining quite steadily and substantially through this year, and have fallen way at the lower end of their 5-year averages. So the current outages, both in oil production as well as refining, are likely going to show us steep declines in stockpiles when we get the figures for this week, next week. And finally, let's talk a little bit about the financial markets. I think the sentiment overall in the financial markets and the risk appetite, which we've seen wobble quite a bit in recent weeks, even months, I think that still remains very vulnerable. Though the peak of the Delta wave is behind us. In fact, the cases globally have plateaued. But the impact, and it's almost like a ripple effect of this Delta wave, is still being felt, especially in the manufacturing activity. We've seen continuing deceleration in Chinese factory activity in August. We had the Eurozone data out this week as well, and though in expansion mode, but Eurozone factory activity is also was the lowest in 6 months. I think more worryingly, supply chain bottlenecks and cost inflation is posing major headwinds for the manufacturing sector's recovery globally. And there are concerns as a result on runaway inflation around the world, not just in the US and what the Fed will do about it, but in general, if inflation continues to outpace global economic recovery, how long can central banks around the world continue with their current stimulus measures? So we had some major worries crop up this week over the ECB's inflation rate coming in at almost the Eurozone's inflation rate coming in at almost a decade high, and posing major challenges for the ECB to continue with its low interest rate policy and bond buying policy. So overall, I think these concerns with regard to economic recovery will remain. They'll likely maintain some downward pressure on crude prices as well. In general, this morning we are seeing Brent at around $70, and I think probably a bit of a holding pattern for crude prices going forward. Whether they start ticking back up like 75, 77, some of the 32-month highs that we saw back in July, I think that will largely depend on first of all the headwinds posed by Delta and any future variants, and global oil demand growth continuing on a steady recovery path.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.